The company posted a beat in its fourth quarter earnings report. That stock is trading higher. When's the last time we said that about GE? And look at that. It's at $12.90, pushing $13 a share after we saw a pullback over the past few days amid the coronavirus-fueled market sell-off. So let's go to more, the panel on this one. It's not the end of the story for GE. The question is, can they continue this trajectory going forward?
Yeah, it's going to be interesting because I think one of the things that very few people are talking about is that they took guidance down going forward. So it's just kind of a whisper compared to what FactSet was expecting. So this really feels to me like a very, very, very forgiving stock market. Yeah. It's looking past all the blemishes.
They took guidance down for earnings per share, but they took guidance up for cash flows. So yes. It seems like for GE, that's what people are paying attention to. Something else people are paying attention to. It's
the viability issue, right? Yes, people want to make sure it's going to be a going entity. It's an old accounting term, but that's what they want to see.
Right, and there seems to be more reassurance on that front. There's also its relationship, as we just mentioned, with the Boeing 737 MAX. Yep. They are the exclusive provider of engines to that, along with Safran of France. And we talked to JP Morgan analyst Stephen Tusa on Monday about this. But he says the relationship between GE and Boeing is a little bit more complicated than it seems.
And what we believe GE has done over the last year is that they've turned around and repurposed some of that capacity to sell into the spare engine market. Right. And that, when you sell a spare, is a lot more profitable. So actually in the near term, the MAX coming back, in our view, will be net negative for them. But as long as it doesn't come back, it is actually supportive and net positive from a profit perspective.
Now, to be clear, he's a bear on the stock. He's got a $5 price target, and this is not the consensus view. But it is an interesting one that his argument is that the margins are higher on spare parts and replacement parts versus the MAX itself.
Right.
Engine.
It's an interesting conclusion because it is pretty much the complete opposite of what GE actually said, too. I mean, they said that their 2020 outlook for this aviation unit, which actually did rise, revenue rose 8% in the reported quarter. It is dependent on the Boeing 737 MAX getting back to service. They expect that for mid-2020. So to your point, they are really depending on the 737 MAX.
What about the fact they missed when the other divisions within GE, the energy?
Power is still well.
Really Yep. Now, there's nothing pretty in that sector. I mean, look, it seems like it doesn't matter what happens in the Middle East at this point. It seems like there is a permanent lid on crude oil prices, and that's just going to continue to increase consolidation and insolvencies in this sector.
I am curious because we're about to go into the discussion about the Fed. You have actually been on the inside, with your work in Dallas. When a huge company like GE stumbles the way that we've seen them stumble, is that an open topic of discussion among Federal Reserve?
And Boeing, for that matter.
Boeing, bingo, among the presidents?
Well, look, I know we'll probably get to this at some point, but recall that it was the Halloween 2018 downgrade of General Electric debt that got the whole ball rolling on the high yield market shutting down, and that was the event that prompted the Powell pivot. Because of the daisy chain effect. So when you see a massive company like this stumble, you start to say, well, gee, okay, now let's see. Now there's AT&T. They've got a ton of debt. Could anything go wrong there? And it's right for policymakers. And Jay Powell, this is his wheelhouse. He understands the credit markets. And it's right for them to pay attention to what could potentially happen. Again, if you just have one kink, you have one downgrade of one company's debt, and it set off a domino effect that shut the markets, shut high yield issuance down for 41 record days and caused a full-blown meltdown in the stock market. So no, I hope that he's paying close attention to it. He speaks the language, and I'm confident that the people at the New York Fed are also all over this.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.